Um,
Yeah, let me turn that off just for a second. Pause. Good evening, guys. Ken at Tortoise Capital. This is a swing trading podcast, some review and some brainstorming. It is March 12th, 2023. Got Dan and Ed. Thanks for hanging in. So we're taking a look at some of Dan's swing trades for over the weekend. So this one is in VIST Vista Energy. Can you tell me, Dan, is that an S&P 500
no,
symbol? This is a small cap.
yeah,
Okay.
it's a Brazilian
Okay.
company of some
Yeah.
sort.
So again, what I'm gonna preface all this by saying that the techniques that I prefer to use are on on large caps, either indexes or S&P 500 companies, so that you don't get some of this. Like you'll notice in here, there's almost no trading activity going on, and it's
Hmm.
drifting. So I like the ones that have the continuous signal. But however, having said that, we're going to look at this trade. Um, this is where it started off with a 30-minute chart and an R3 MMRB, and then intraday, as that starts peeling off, you're able to make the gains on let's see, what's the R capture on that one?
It was almost 1 hour.
Yeah, okay, so plus one. So I just want to note the time value of money. Uh, you're talking half a day at plus one and no overnight risk, and you got the sweet spot of the curve, which is also available on this day, maybe on that day. You might have gotten trapped in here, but on this day, on this day, um, on this day, twice. So these little surges of intraday motion look like noise on a daily. I mean, that is as this whole piece right here is as non directional, sideways, failure to follow through until it failed. That's as that's as non directional as you could ask for on daily bars on that time frame. You got a green bar, red bar, nothing going on. But inside that day on 30-minute charts, you've got a clear plus one opportunity there, one here, one there, one there, one there, and two here with no overnight risk. And so, just on its own merits, the idea of the 30-minute swing has real value. What I like to do with the 3 minute chart is when I drop down to the 3 minutes, it's because I have a high priority target that's in a compound critical state and is really ready to move. Or it might have been one where, like on this trade, where you were holding an overnight position, and I get very interested in improving my performance on the 30 by dialing down to the 3 to see if there's more I can do. If it's going in my way, can I get another turbo position on it, or do I need to just get out of it because it's not working for me on that tactical trade? When I grow a 30-minute trade to the daily, uh, what I want to do uh, is I'm using not my core capital, but I'm using money that was earned by a cash trade to pay for the risk on the daily chart. And then I keep a separate track of the performance of that so I can see if there's any value in the decision that I make to grow a 30 into the daily for the overnight. Is that actually adding value based on R's? The reason I do that mostly is a psychological factor, which says there have been so many times when I had a good intraday trade, and then I completely exit it, and then the next day it gaps up and goes, and then I think, oh man, I missed that whole gap move. And now I feel stupid, and then I carry that emotion forward, and then the next time that I would normally take the exit, I say, hey, remember that last time when it gapped up in your favor, and then you regretted all that, and then so I will stay. And then it gaps the other way, and then I get smoked, and all the money that I made on the grind intraday disappears in an overnight gap. So that makes me feel stupid. So the accommodation I come to is like, if I decide that it's something that I want to hold overnight, I will sell about 80% of it, and then that generates the money of the win, and then some portion of that I elect to keep in a wider stop with overnight risk, and then try to grow the trade. Then if it gaps in my favor, I feel just as smart because I made the right call, even though the position size was only 1/5 this size. The payoff for me is the psychological feeling of, well, I did it right and I got a piece. At the same time, I feel smart because I respected the difference in risk between holding it intraday and then holding overnight. So it's really more of a psychological trick for my own sanity than anything else. But in order to validate the insight, I keep a separate score on this on the stats of how did it perform when I held it overnight, and then that tells me if I'm doing good or not. And it's not bad. It's not brilliant. It's not it's good enough that I keep doing it. But if it's just the psychological value of it, then I'm really okay. Now, something I want to point out is also that when do you make that decision on when to hold it overnight? And I'm going to go back to the daily bars and say, look at what the market condition is in, and say, is there any market advantage to holding things overnight? So for the last while, we've been in a sideways market, and for the large caps and SPY itself, there's no advantage in holding it overnight because you get a lot of behavior like this. There's no real follow through, and good days are often followed by bad days. So holding it overnight is you're just giving it back in the normal noise of a sideways market. The times that I decide to make those holds overnight tend to be when we are in a bull market or a bear market. I should have probably put that on the way down. But it has to come out of the bear to come up into the sideways and then get into a bull. Now, I say all that just to say that, the swing trading I've been doing with the 30-minute and hold overnight, I've been holding more often because the sectors and the symbol that we're in have shown favorable conditions, even though the market has been choppy. In order to do that, I think you have to have the larger cap stocks in the indexes, and maybe not so much small cap Brazilian energy companies. However, having said that, the point I want to make is, it's making these nice directional moves of people that are interested. There's only so many guys interested in that market of Brazilian small cap energies, and they're making their little moves intraday. You know, but uh, this period in here of sideways chop, there was no swing advantage available. If you go back and look at the daily where you got in is fine. I would rather have seen that back in here where you have a rising PSAR and now it rolls above the direct. So this would be better. You're okay to stay in it on a daily basis until it breaks and you get that violent break, and then this is a signal to get out, which you did. Then that could actually be the signal that sends, hey, it's coming back to the Bollinger Band mean, which is why this could have also been a stop and reverse. And when this rollover happens, there's a short signal on the 30s that was available, particularly when you look at what the market was doing, which was getting murdered on Friday at that same time. So there are intraday opportunities on the 30 just for themselves that are worthwhile. And what you get when you're working on the 30 is, I think I showed you the example, I forget which symbol it was, but it had something like a 17-cent MMRB, which was the R10, and it had about a 60 cents maybe 50, 51, but a 60-cent R3, which is 3 times the MMRB, which is about a frog box. And then it had a $1.70 range stat, which is the maximum reasonable intraday move, which is the stop that I like to use for the overnight. And so what I find is that this little sweet spot inside here, it feels like swing trading, because I call it swing trading because I'm prepared to hold it more than one day, but in practice, I was getting rid of a lot of those positions intraday. Like if you listen to the session on Friday night, I mean, we were probably holding 60 to 70 R of open gains from the previous 2 days. And I exit all of them. Not because they weren't all working on Friday, but this looked like such an exaggerated sell off of a day. And then all of the psycho madness about market meltdowns and bank runs and government intervention on SVB. I said, I didn't want to have multiple positions short on multiple symbols over a weekend when everything was so in the news and holding 50 or 60 R in hand. I was just happy to cash that and sleep well and wake up in the morning on Monday thinking that there'd be a lot of volatility anyway. So the fact that there's going to be a lot of volatility on Monday told me I didn't want to hold that stuff overnight. Now I don't know if there was as much news Thursday night to avoid the overnight hold on Friday, and we held positions. But my point would be is that this move on the daily not only is an exit signal for that, but it's also telling you that this entire long run up may have just broken, and now you've got real reasons to be short. And so now it's gapped down to a Z3. I could actually take that with a wide stop. That size box is about your R stat. You could have made that a swing on the daily chart with your stop up here at the PSAR flip and just enjoyed that. Or you say, let me take whatever the 1/3 of the, on this kind of a gap, I would like to see, if you do the OR3, you end up getting that, and then probably scratch, and then probably short. Actually, I say OR3. That's really the OR30 because you're on a 30-minute chart on that, which is also kind of a valid approach. Like if you had the OR30, that size of a risk is probably pretty close to your R3 MMRB. So you might have gotten long on the breakout above the OR30 and then scratched, because this is supposed to go through the dragon and get back up into here. When it doesn't, that trade ain't working, so just get out of it. And then you're either short here or you wait for the collapse of the OR30 and short, and then you're happy. And then here, this is now if you end up getting short here when this breaks down, you're holding more than 1 R intraday. And now you say, was that enough? Is 1 R a day on each of these days enough with no overnight risk? And you might end up talking yourself right into that 30-minute fast swing and occasional hold overnight. Now, what I like to do is, if I have this position here on the 30, and maybe that's where I decide to exit the 80% of the shares, then I might take this one and just say, look, here is my overnight risk. Let me just hold that. So that would be about probably here. Let me treat that as if it was a new entry with a stop here. And then the next day, you get that little adverse gap and it starts going. And now when the new day is open, you realize, oh, this wide stop protected me against disaster. Now I can come in here and look and see what's going on and say, oh, I've got a morning hook. I might actually be able to put the turbo position back on. Oh, come on. I might be able to put the turbo position back on here with an OR3 or when it breaks the PSAR and now get the intraday position. And then I've got the same size on this trade as I did on that trade. And now it's working. And then somewhere up in here, you decide to exit the 80 again. You go back to your wide stop and say, if I had bought this right now with market's money and my stop was here, the next day it gaps down and stabilizes. And now somewhere around in here, you could decide if you want that trade or not. And you would take a fractional loss on that swing. And you might have even gotten short in here on the 30 and then made another decision to hold overnight or not there. Probably wouldn't. And then the next day, it does this and starts rolling over. You might have gotten short in here. So my point is that I like to treat the 30-minute on its own with that nice standard risk here. And I don't assume I'm going to hold it overnight unless there's a compelling reason to do it. And then if I do, I cash that thing and then use some portion of that money to 20% of the gains or whatever to fund the overnight risk with a wide stop and then immediately get back into the 30-minute discipline. So I try to keep the 30-minute performance different than the daily performance. And I'm using that wider stop just so that my position size is low. So if it does gap against me, I'm taking a fractional R. But then I'm right back into the 30-minute routine looking for these intraday moves. And especially when we've come out, we had a harsh bear and then it reverted into the spring and then that became a sideways market and it's been flirting with the bullish, but it's really been sideways. So I am less interested in holding swing positions overnight as swing positions. I'm happy to take the 30 minutes because that's really what's working in this kind of a market that is bouncing back and forth. So that was kind of a long way around to answer your questions. Let me stop there and check in with you.
No, that makes a lot of sense. I'll have to see as I get more comfortable with the 30-minute trading, kind of how much I want to swing with it intraday as opposed to just look for overnight goodness, which may not be coming. But one question, when you hold overnight and you're using an R-stat-ish stop to protect against the gap, suppose you get the gap. Sometimes there's a lot of volatility on that first half-hour bar or that first hour bar. Do you extend that R-stat stop blanket of protection around the whole opening bar, the opening 30 or the opening 60 bar?
I'll tell you, as soon as that thing opens, I'm looking to get out of the position on a 30-minute bar signal on the merits of the signal as opposed to just trusting the width of the wide frame. So for instance, like let me see if I can find one here. Yeah, so on this one we're and then so now if I use this wider frame, my stop is down here around the Z3. This thing is supposed, and this is where it closed. This thing is supposed to go. But when it opens here and starts selling off, I'm out there. And then my overnight swing, this whole package here was -1. So that overnight swing is about -0.2. And I'm looking to get out of it right there because it's supposed to go. Because I want to add the turbo position back on right at the open as it continues to follow through. As soon as it doesn't start following through, I just get out, take the -0.2 on the swing, get all my money back, and reset. So the wider stop simply is my way of reducing the position size and breaking contact with the original trade and then treating it on its own merit. It says, look, I bought this thing at some price level with this wide of a stop, and because the reason to hold it is because there was enough information prior on the day before that if this thing behaves well, it should go right from the open and maintain the momentum that it had earlier in the day. If it starts dropping off here and I get that it hits the internal PSAR, I'm just out because it's supposed to go right away. And so there's the micro loss. And then that's the full 1.0 that protects me against disaster. So I'm looking for it to go right away. Let's say on this one, maybe you had some reason to get in because of a pattern of 1, 2, 3, and it closed well, and you wanted it to go right away. This little adverse sell, it doesn't hit any 30-minute PSAR stop or anything, so you might have been able to stay in that one for here. So the wider stop keeps you in. So that's I'm trying to break the habit here of thinking like every time I see something that looks like a good 30-minute bar swing for the upside, that does not automatically also mean that I plan on holding that for 5 days. I'm planning on holding that for one day, getting what I can, if and only if it's closing well and the market's okay and no other reason not to veto it. I'll hold a 1/5 of the position overnight with a wide stop with the intention of putting the swing right back on with that tighter 30-minute stop, and it better just keep going right away, because if it doesn't, I'll just get out and call it a day. After I get about 3 or 4 or 5 of those in a row, that thing will have moved out enough on the daily chart that this thing had 5 days when it was supposed to go, but it didn't. And in fact, on the daily chart, you can see looks like the R10 was rolling over.
Yeah.
And right in this day here, it was supposed to go. This day here, it was supposed to go. And the fact that it had 5 days and never made a new high, that's your high. And it had 4 more days and it never made a new high and closed poorly.
Yeah, might have been better to sell it at the end of the day.
Somewhere around in here, there's
End of
not
Thursday, at the end of Thursday.
yeah,
Yeah.
if you look at now with that kind of logic, you say, look, here is a peak of the R10. Here's another peak of the R10. It's had one fail, two failed intraday, and that was not a promising move. There's
And
nothing in that move that says people are urgently buying this because they think it's going up tomorrow.
yeah, it's flipped the
That
PSAR there. It's flipped the
yeah,
30-minute PSAR
that was
here.
the opposite of that. In fact, this move right here is enough reason to get out of it today and not eat that one for tomorrow. And if you do that, this is still a fractional gain off of that original one.
Yeah. I've got a situation where I don't have active trader status. So the minute I get a loss
Yeah,
in something, unless I want to eat the capital loss and not be able to deduct that capital loss,
yeah.
I'm going to have to wait a month. Let's trade that name again. Yeah. I got to think about getting active
Get
trader
active trader
status.
status if you're going to be serious about this. It
Yeah, I
doesn't
think
mean you have
so.
to. Hey, that doesn't mean you have to use the capital, right? You can still trade at exactly the same size you're at, but just put a chunk of money in there that says I've got active trader status. Continue to trade at the same price level, and just set that aside. And now you can trade the way you want to trade, but at the level you want to trade. Just because you put that much in the account doesn't mean you have to then scale up to get the maximum possible position
Yeah.
size.
No, I have the capital.
Yeah.
The issue's more just do I want to do that many trades? Do I want to, which I guess I do because I'm doing them.
Yeah, I mean,
um,
you're doing it.
yeah, I am at this point. I'm
So
doing,
send a signal to your inner monkey
Yeah.
that you're a serious person about this.
Yeah.
See what that
Well,
does to your psychology.
yeah.
All right, let's take a look at some of the other ones real quick. See if there's anything that
Yeah.
jumps out.
Yeah. I think
CVS.
CVS and Devon were pretty cool. On those, on that one, I went to triple turbo, 330
Yeah,
daily.
yeah,
And so that one, you read it from right to left.
yeah. So this is, I think that's a perfect exit. And then I would say, when that thing did not reverse but started doing this, pile the turbo right back on that thing. And then intraday, when it does this and chops and then starts violating again, crush. And then that's a pretty good exit. I mean, this is a better one at the 123. And then it doesn't run away from you. Somewhere in here at the flip, it starts failing. Um, and then I'm going to say, just noticing the intraday. I mean, those moves got to jump out at when you become a 30-minute trader. Those moves got to you really got to see the PSAR flips for what they are. You know, here, there's this one, smash, and it's the PSAR all the way down.
Yeah. Well, I started trading this one on I guess this
The
well, I
seventh.
got in on the 8th,
Oh, eighth. Okay. Yeah.
I guess I wasn't trading on the 7th.
Yeah. I mean, that's still a good entry because this is that shelf that breaks.
Yeah. And I got in on the I didn't need to get on in on the 3 minute on that, but I've been having a lot of
Yeah.
30s that kind of broke a shelf and then they came
Yeah.
back and I got stopped out. And I thought, well, if I do the 3, I can maybe grab an R. And if it keeps going, now I'm in the 30. But if
Yeah.
it doesn't keep going, I've got an R uh, to make sure I break even on the trade.
Yeah. Yep. This one also benefits from the fact that this broke down intra on the daily bar below the big sell-off day.
Yeah, that was how I got in it because I
Yeah.
got the alert. You
Yeah.
see that blue line? I had
Yep.
an alert there,
Yeah.
and I got my alert, and I say, "Oh, okay."
And
Otherwise I
that's why I
never
want
would
to
have
say
seen it.
when the low of this day broke, same I should be seeing another position right there for the same reason. In the same way that every time look at this, every time one of those breaks,
Hmm.
that should be a new signal to keep getting short. Every one of those is a mechanical entry short, and that's starting to get short from around 88 all the way down to 80. That's a 10% move just on the dailies. Every low of the day should be an alert to you, a breakthrough of the previous day's low. So what I'd like to see you do is add the mechanical alert, just extend that into the next day. So like this blue line here, I'd like to have seen that one coming in here and say, oh, it just broke yesterday's low. So I'm going to, so you can see
Yeah.
that you're below yesterday's low. And remember, that's in the logic of if this is where this was today, right here, then a break above yesterday's high is the green zone where you want to be long, and then a break below yesterday's low is the red zone where you want to be short, and everything in the middle, everything inside yesterday's range is the yellow zone where you can trade in this space as long as you can see 2 to 1 between those two breakout points. And that's why the on the 30-minute chart that 3 times the MMRB gives you about, it's basically dividing the yesterday's range in thirds. So if it does bottom out and starts to find support at yesterday's low, you got 2 units of reward to the upside. So that looks like this. So if this was yesterday's bar, and then it opens somewhere near today's low or yesterday's low, and then it starts moving up, you can say, well, I can give it 1 unit of, even if you divided it into 4, you'd be all right. take a fourth of yesterday's range, and now I have 1, 2, 3 units inside the yellow zone just to yesterday's high. And that justifies taking this risk. And the logic is it held support where it held support yesterday. It did not fail into the red zone. I don't have a justification for believing in new buyers coming in and pushing it north until it gets above yesterday's high. I have to see buyers come in willing to push it. They're willing to buy it up in this space at a price higher than it got to yesterday. So that's new information that buyers are in play. So meanwhile, that leaves you inside this yellow zone. And if I can take 1/4 of yesterday's risk and I see price action moving in my favor, well, maybe I can take that entry thinking I got 1, 2, 3 units of reward to the upside. But if it fails, I'm going to be short because of a collapsing dragon. So that's why you want to really pay attention to yesterday's high and low as a signal for new information about buyers and sellers. Until it gets out of yesterday's range, we're just in the yellow zone here. I got no new information. But at least I have a 3-to-1 potential to justify taking this risk. So very, very simplified green zone, yellow zone, red zone. And the 30-minute bar feels like it has plenty of information in here. Like, that's why when yesterday's low breaks right here, and you say, well, here was yesterday's range. If I break that into 4, you could take one of those and look, that's right there. Perfect. There's my risk box. 1, 2, 3. So that move from here down to here was the same as this move here. And then it held, and then it broke again. So you might have said, well, let me try another position here when that shelf breaks. And then you end up getting that one, which is another 1, 2 more moves in your direction. So those are strictly intraday moves. And then that puts a real significance to closing out the day and not automatically assuming that just because I got a 30-minute move in here that I should always carry that over because it's just going to go. No, I just get what I can when the market is open and in my favor. Make some exit decisions down in here. Do I hold it or do I just cash it? Listen to what I was talking about on Friday. I exited 10 swing trades that all look like this, or intraday moves that were like, they were all 2-day trades. Those 2 days of movement ended up with about a 50 to 60 R based on the 30-minute risk box. And I didn't hold any of those over the weekend. And it looks to me like all the futures are up across the board. So every single position that I had short, which had multiple positions on it, would get smashed at the open and probably give back 3/4 of those open gains. So I don't want that. But Ken, what if they hadn't intervened and it's going to go down tomorrow? Well, then I just get back in on the intraday volatility because it's in a sideways market and the market is crashing. That's the easiest intraday move. I don't have to have any overnight risk in a bear. If I do, it won't be to any of my core capital. It'll be from a trade that already earned its privilege of keeping a piece overnight, and that's really just so that I don't feel stupid at always missing the gaps in my favor. And that's pure psychology, like I started with. So anyway, CVS, and remember that the previous move on this thing was a Godzilla that was enraged and failing. If you go back and look at all those swings, all of these moves in here, those were those little 1-day moves in CVS I was taking and never holding it overnight. And just next day, just started another piece. And yeah, did I lose some of the gaps? Sure, I don't care. I was collecting little 1Rs all the way down there. That gave me 5R just from the intraday portion alone. What a nice way to sleep comfortably at night. All right, let's look at, Devon Energy. Yeah, this feels very much like CVS. That's so good. Perfect exit. Now, see, you got paid really well in there. That's almost 2R. And then the next day, who knows what you'd have done inside here because of all that madness. But when the smoke clears on this day, it comes through the dragon and then fails and it comes back through the dragon. There's your short signal, or this is your short signal. And you still get the intraday move down in here. And then I like the exit decision because why bother? How much more did you want out of that than this? That's 4 days down in a row. That's all of this. Now, the only thing that I would notice is that that's a reasonable collapsing dragon. But if this is going to fail tomorrow, it's going to start failing like that, and you could pile right back on and then have had no overnight risk. So I would make that a high priority to be ready in the morning.
Got it. Yeah.
Treasuries.
Oh, that turned into just a 3-minute trade. I wasn't able to turbo it.
Is this 3 over here?
No, that's daily.
Okay.
These go right to left.
Oh, daily 30 and 3.
Daily 30 and 3. Yeah. Those go right to left when I've got the 3 there.
One thing I notice in the treasuries don't have a lot of amplitude during the day, but you'll see a lot of this kind of crap. And this alone, these 2 bottoms, is this. That really makes it night. When you're an hour into the day, this is almost like a slow frog. This is an auto entry for me with treasuries. That when you get that little that little comforting bottom of the dragon all the way up, it was supposed to fail here. It did not. And then the confirmation is when those break, you're good to go there.
I would have got another R if I'd entered there.
Yeah.
I might not have been looking at it then yet, but
and then again on the PSAR flip here, that ain't bad.
Yeah, I was out though. That's
coming
why I had
out of a sideways quiet channel and a breakdown.
Yeah,
that ain't no bad.
But what I liked about that was I got 1R in 20 minutes.
And that move right there is nothing more than this move, which is a rejection of the Z3 excursion.
Mm-hmm.
Right. So, and that's just a move thinking maybe it gets back to the Bollinger Band mean, but you can make a living on that right there. Treasuries are never going to have the asymptotic move of a Tesla. The market is just way too huge. So when it gets to some natural limit, like a Z3, that's an extraordinary adverse move. Then that's a signal to start looking for a reversal on the drill down, which is right here. And then the PSAR flip, that might be enough to just try it. Treasuries are nice that way for intraday only. So anyway, that's what I wanted to say about that and to answer your other questions.
I really appreciate it.
Just get this locked in. And I think that's everything. All right, fellas, we'll get this published and posted. I'm going to hang this on probably on the Saturday night lineup because that's when I should have had it done. But we'll get this on Patreon for further study. All right, that's everything I got. You guys take good care.
All right, have a good night, Sensei.
Yeah.
Yep.
Night.